The rally is a self-feeding machine. The AI demand is a self-feeding machine. And like we said, the current models that have already been built needs AI infrastructure, and the inference of these models will need more and more AI infrastructure. So that's the non-bubbly part.
The world's most valuable company, Nvidia, has delivered a big result, lifting the gloom on markets as investors look past concerns about AI spending for now. The tech darling announced year-on-year revenue growth of 62% to $57 billion in the third quarter. There's been a bit of a relief rally in the sector.
Yeah, very much on point. So Nvidia today, as you can see, the results are really good. Not just the headline revenue, but also its profit margin has held up really well in the mid-70s. Also, let me remind you, this result does not assume any China revenue at the moment. So if there's any upside surprise on that one, we get a good bonus into the coming quarter. Looking at the guidance perspective, Nvidia has stepped up and showed confidence in terms of their revenue guidance, guiding beyond $66 billion US. So that represents another very healthy quarter if that does hold up, with some of the street analysts, more bullish ones though, pointing towards $75 billion.
Anna, this is a big number. Does it set the stage now for companies in this sector to beat the market expectations in a big way?
I think you're exactly right there. This is not just Nvidia, but Nvidia has become its worst enemy, setting bars higher and higher for itself quarter on quarter. But also, if you look at the current earnings season that everyone's watching pretty closely in the US, the bar for reward is getting higher.
Nvidia CEO Jensen Huang has told investors today there's been a lot of talk about an AI bubble, but from his vantage point, we see something very different. What's he seeing?
I think I would love to be on his side of the AI rally, because right now Nvidia really sits at the heart of the Western AI ecosystem, right? So it's pumping chips, it's pumping AI infrastructure to all of these hyperscalers, to all of these large language model trainers and inference, right, in that capacity. So as long as there is AI demand, and let's be really clear here, it's not just new demand, it's ongoing demand. So now we have 5 super models in the AI industry. The inference of these models will create a long-term demand for Nvidia. Set aside all of the emerging sovereign user of AI, that's going to be new demand booster for Nvidia as well. So that's why I think when it comes back to the CEO's point, Mr. Huang, I think his view is that the demand for cutting-edge technology and the end-to-end AI infrastructure is not slowing down.
But isn't the big question here whether all of this AI capacity that's being built today is going to be profitable tomorrow?
Yeah, very much so. That's a right question to ask. So we break it down into 2 parts. Part number 1, yes, for all of the AI capex, we haven't seen, I guess, monetization proof in some of the income statements, right, for some of the hyperscalers. But the problem is, just like the nature of R&D, that capex is needed for them to not take a step back in the global AI race, and that would get immediately becoming a competitive disadvantage, right? So they're trying to avoid that. But to the other side of the valuation equation, Nvidia, and with its leading ecosystem, it has other players in the supply chain as well, such as Cisco, such as Micron, such as Broadcom to one extent. So these companies will benefit from the demand of the rally, because the rally is a self-feeding machine. The AI demand is a self-feeding machine. And like we said, the current models that have already been built needs AI infrastructure, and the inference of these models will need more and more AI infrastructure. So that's the non-bubbly part of the AI race.
Anna Wu, thank you so much.
Thank you.